The mid-cap surge in late trade, relative stocks gain in a weak market.
The IndusInd Bank stock slumps after it discloses incorrect derivative accounting that concealed a loss of over 2,100 crore rupees pre-tax. The move coming soon after RBI approved only a one-year term extension for the CEO.
HG stocks surged on the back of a proposed value unlocking in Bhilwara Energy, in which it owns 49%. The start of Tata Communications gains after ICICI Securities upgrades the stock to buy from hold. And Laurus surged after positive commentary on the pharma sector. Hello and welcome to a fresh edition of Markets Forward, your go-to show where we tell you what went on today and we set you up for tomorrow's trading session. I'm Nigel and with me as always is Sudip. Well, Sudip, a very, very good trading session. You'll say that the markets ended mildly in the green. Why was it so good? Well, it was so good because when you woke up this morning, there was a lot of fear among a lot of investors and traders. And the last tick on the markets was at the high point of the day. And portfolios are feeling good because the mid-cap index did a relative outperformance in trade. Good going, I think. Resilient Indian markets.
Oh, absolutely. And it looked so good, right? Because 22,500, not bad at all on a day like today. And I guess it's because India preempted a lot of that fall. And we've been falling for a while. We've been falling not just, yesterday in the last 24 hours. We've been falling for 5 months. So perhaps investors are beginning to see some value in Indian equities as other markets like the US are getting a little more muddled. Their outlook is getting a little more muddled, as are their macros. And that seems to be playing out in India even yesterday and today as well. So good fight back by the bulls. The banking space obviously was a bit of an issue today. The bank nifty was down about 0.7%, but you all know by now probably why. It was one stock. The IndusInd Bank story was weighing on the market quite a bit. But a lot of other banks like ICICI Bank were fighting back. So all in all, Nigel, I guess this is not bad. It kind of is a sign of hope, right? That maybe, just maybe, the market is finding its feet again.
Well, that's right. In fact, let's run you through all that we have lined up for you on the show. We'll get you a technical call. We'll tell you what went on in trade today. And we'll also get you some interesting corporate voices. But first up, let's welcome our guests. We have Jai Bala of Cash the Chaos, who joins us to help us out with the technicals, and Sudip Bandyopadhyay, the group chairman of Inditrade Capital, who joins us to help us out with the fundamentals. Well, hi, gentlemen. Thanks a lot for joining in. Jai, we're resilient, but you think, this is just the start of the big fall. To give it to you, I think you called out that the NASDAQ is going to crumble. And that's precisely what's taking place. So what are the levels you're looking at on the US market, particularly the NASDAQ, because that went one way up, and also on the Nifty levels you're looking at?
Yeah, in the very short term, I'm expecting the Nifty to hold up about 22,250 and continue this counter trend bounce that we are seeing since about 21,950. The market is likely to climb to about another 22,750 to 22,900. When it comes to the Nasdaq, I said, when the tariff Tuesday low or the DeepSeek Monday low is taken out, I'm expecting the Nasdaq to crack big time, and that's happening. But in the very short term, there's been an extreme spike in the put buying, so that's going to provide a short-term bounce opportunity. So, but the medium term looks quite negative for the Nasdaq. Even if it were a correction, I'm anticipating the Nasdaq 100 to drop to about 16,000 to 15,000. And when it comes to the Indian market, this is a short-term reset. The markets have been battered down for the last 4-5 months, so it needs a small relief. Imagine the Nifty to be like a springboard diver, so it needs a little bit of height to plunge a little further. At the moment, it doesn't have the height. The higher it goes, it's better for the markets. So that provides a better shorting opportunity.
Okay, all right. Stay on, Jai. We'll have lots of questions for you as we go forward. We also have Sudip Bandyopadhyay joining in. Sudip, your first thoughts on the market, like we've been using the terms, right? Resilient, trying to get back on its feet. But what do you make of things and the fact that even in the mid-caps, now it's not as bad as what we've witnessed in the last couple of weeks?
I think, Survi, you mentioned in your introductory talk, the market has been falling in India for the last 5-6 months. And I think, US markets have just started falling. So probably the ferocity of the fall here has been kind of taken out. And we are sitting at a position where valuations have started looking attractive. So, when US markets are falling, I don't think we will see a similar ferocity or ferocious fall in India for some time. Yes, there are a lot of headwinds and there are a lot of challenges and a lot of uncertainties. The volatility is huge. But I think valuations have started looking attractive, and that's the reason why at some levels buying has started coming in. And my belief is that buying will come in. Look what was happening at IndusInd Bank and the entire banking space today. But in spite of that, I think the market held on its own and closed positive, mildly positive.
Okay. All right. Well, I think we can focus on the stock of the day then. IndusInd Bank's promoter, Ashok Hinduja, said that he became aware of the accounting issue only after the bank disclosed it, but he assured support to the bank and its management and also promised to infuse capital if the need arises. Let's listen in to what Mr. Hinduja had to tell us here on CNBC TV 18 earlier today.
As rightly asked whether I am aware, yes, I am aware only now when I have come to know. Because me as a board, I am not a board director, neither I am a management. So this question, why they came to know, when they came to know, why they have not corrected and not informed, it will be very difficult for me to answer that question. But I can tell you, our trust and confidence in the board and in the management is very strong, because we have seen, IndusInd Bank has seen in last 30 years various problems, and it has all been handled properly by the boards as well as by the MD and the management then. Anything, whichever their queries were there, have been answered. Now it is left to the regulator as and when they think proper to provide. And once we get the approval, we will immediately increase and put injection of the capital into the bank as and when they require.
Okay, all right. That was the word coming in from the promoters of IndusInd Bank, saying that they're very confident that the board will resolve this issue at the earliest. Now let's listen in to what the bank's MD and CEO Sumant Katpalia had to say on his term extension and the findings of the bank's internal review. Now, this was on the conference call with analysts last evening. The commentary that you got from the promoters was as of this afternoon. Let's listen in to what Mr. Katpalia had to say to analysts yesterday.
Of course, this would have had a bearing because they were aware of this issue. We actually, there was some inkling towards the issue, and I think I don't know what is the rationale for them to give me 1 year, but I think they're uncomfortable with the way my leadership skills of running the bank is, and we have to respect that.
All right. Well, the shares were under pressure. Abhishek joins us to help us out, to fill us in with a quick analysis on what went on. Abhishek?
Well, Najib, to begin with, internal review process with respect to asset and other liability accounted for derivative portfolio found out that 2.35% of the net worth has got adversely impacted, about 1,580 crore post-tax and about 2,100 crore pre-tax. So they have appointed external agency to review and validate the internal findings. The management in the con call did say that the practice has been ongoing for 5 to 7 years now. It was discovered as a part of review initiated following the directives from RBI that came in on 1st of April 2024. So CEO's 1-year extension versus the 3-year that the board had sought acknowledged to be influenced by this issue. Now, analysts do say that this is a one-time earnings impact but can lead to a short-term derating for the lenders. So they have cut the earning estimate anywhere between 20% to 25%. Now, we have brokerages, many of them like MK, Dam Capital, Motilal Oswal have downgraded the ratings on the stock. Also, all of them, like 5 of them that I have on screen for reference, have cut the target price as well. Now, to understand more in detail, the promoter holding is at about 16.3%. 51% of it is pledged by them. So, stock movement, if you take a look, the share has dropped to the lowest level since November 2020. It's also posted the biggest single-day fall ever seen in the history of IndusInd Bank. Now, the company has erased market cap of nearly 18,000 crore today. On a 1-year forward price to book value, it's fallen below 1x. So price to book slips to the lowest level that you are seeing in nearly 5 years. It's down about 32.7% in last 1 month and 58% of 52-week high. If you take a look at the valuation picture, yesterday a price to book value on a 1-year forward basis was at 0.94 and today it's come down to 0.68. Now peer comparison, if you take a look amongst the large cap, IndusInd Bank valuation is the lowest, and Yes Bank's market cap is now higher than that of IndusInd Bank. As well as the valuation front, Yes Bank now commands more than 30% valuation that is being given to IndusInd Bank on a price to book value basis. Back to you.
Okay, all right, got that. Thank you very much for it, Abhishek. Let's quickly go back to our experts on this. Sudip, what a day for IndusInd Bank, right? I mean, clearly there's a lot of confidence that's been damaged today. What would you advise? I mean, any point in venturing in, look at valuations, look at maybe a quick recovery, or is this looking too murky for you right now?
The stage should be, it's too murky. I think let's things settle down. And, they're talking about a figure of 2,100 crore, pre-tax, but external investigation has started. Let's see. And you never know, external investigation may find a bigger hole. So I think I'll be a little cautious and wait on the sidelines, keep watching. Of course, on a price to book basis, it does look very, very attractive compared to peers. But I'll wait and watch at this stage.
Okay, all right. Thanks a lot for that, Sudip. Just stay with us. Let's turn our attention to the pharma space then. Laurus, well, that surged after a positive brokerage commentary on the pharma export market. Vinny's with us to help us out with key trends that is favoring pharma sector. Vinny, tell us more.
Absolutely. So interesting trends that have come out during this report, Feb as well as Q4 FY25 so far is what the report is coming in. This is from Phillip Capital. Now they're highlighting that specialty drugs like Revlimid as well as Mirabegron that have seen very good growth, and that is something that is supporting the growth for most of these pharma companies who are selling these drugs. Revlimid specifically for Zydus Life in the month of February has been record sales, highest ever sales that they saw for the generic Revlimid, 1,250 crore rupees that they've seen in a single month. This is the highest ever record that they had. Other than that, Laurus Labs, like you were mentioning as well, the stock saw a very sharp run up, and it merits this as well because they've seen a good growth quarter-on-quarter basis versus other CDMO players. The only other CDMO player which did well during this month of Feb or Q4 FY25 so far was Syngene. Both of them have managed to see growth of 60+% in terms of export trends on a quarter-on-quarter basis. Laurus, this good growth was mainly led by the new CDMO compound supply, which was of around $17 million to Pfizer, as well as there was a good ramp up in their ARV formulation as well, I beg your pardon, which has led to the good growth for Laurus in terms of overall performance. Generics, this time we could see that subduedness continue in Q4 as well in terms of earnings. But yes, these are the key growth trends. Surely that what we're seeing in terms of a performance. Laurus, Syngene on the CDMO side have seen a very good growth. On the other hand, Aurobindo, Divi's has seen a bit of a muted growth coming in. Cipla also a muted growth coming in on an overall basis is what we're watching out for.
Okay, all right, Vinny, thanks a lot for that. Well, shares of Tata Communication as well, they gained after ICICI Securities upgraded the stock to buy from hold. It also raised the target price to 1,840 rupees per share. The brokerage stated that the core connectivity free cash flow and digital services potential is undervalued. They also said that the data revenue growth is likely to swell with the Red Sea issue now behind and double-digit order book growth. Well, gentlemen, any view on any of these names? Jai from the Pharma pack, do you like anything out there or do you believe there's a shorting candidate?
No, Pharma was my favorite for quite some time, but it's come to corrective territory since January. I think we should see one more lower low below 19,600 on the Nifty Pharma index. Once that's done, there could be short-term opportunities, bullish opportunities coming up in the pharma space. When it comes to Tata Communication, I think the low that we saw at about 1280 isn't looking like a solid low, but this is looking like a corrective bounce.
Okay, all right. Sudip, what about you? Any view on any of these names, Laurus or Tata Communications?
Well, I think Laurus does look interesting, and definitely, if you can stomach a little bit of volatility, it's worthwhile buying for long term. Tata Communication also honestly does look good. I think it was not properly valued by the market, and there are a lot of positive factors which needs to be considered. So again, I think Tata Communication does look good from a long term perspective.
Okay, all right, gentlemen. Thank you very much for your perspective on all the stocks and the market itself today. Really appreciate it. We'll see you again soon on the show. With that, it is time for us to slip into a very quick break. Come back on the other side. All the key corporate voices that we picked up today, along with the key events to watch. Welcome back. So not a bad day for Indian equities given the global context. Let's now talk about the key events to watch tomorrow. Manglam's here with the list. Manglam.
Well, a lot of macro events, more macro than micro. So we start with the Reserve Bank of India. It will conduct its open market operations worth nearly 50,000 crore rupees. So we'll keep an eye out on that one. You also have the February mutual fund data coming by. The SIP trend, the withdrawal trends are something that we'll most definitely keep an eye out on, given the weakness that we've seen in the market itself. Rhythm Desai today did say that, retail is not tiring out of this market itself. Speaking about macros, you also have the IIP data as well as the CPI data for India, which is likely to come by tomorrow. This will be after the markets. And then in terms of individual stocks, we'll watch out for PFC because, there is a board meeting tomorrow to discuss their borrowing plan for this year. And they'll also declare their fourth interim dividend. I'll watch out for United Breweries as well as United Spirits, some of these alcohol stocks. As the Telangana budget session begins, remember, Telangana is the biggest beer market in the country. And finally, we have some global economic data, the US CPI data, federal budget, and US tariffs on steel and aluminum imports to increase to a flat 25% without exemptions or exceptions. And crude oil is something that we'll watch out for as well. The OPEC monthly oil market report comes by tomorrow.
Okay, all right. Manglam, thanks very much. That's a packed list. A lot's going on tomorrow that we need to watch out for. And with that, it's almost curtains on this edition of Market Forward. But before we go, today, Nigel and I had the opportunity of sitting down with one of the biggest bullish voices on the Indian market, Rhythm Desai of Morgan Stanley. And we managed to quiz him on a whole host of issues, from Indian market valuations to whether FPIs will come back to this market anytime soon or not. Take a look at some of those views. Thank you very much for watching.
In February, a policy pivot, which I will say is one of the biggest in my career, going back 35 years. The RBI has put a three-pronged correction, cutting interest rates, committing itself to liquidity, and also starting to lift the regulatory burden on the banking sector. The RBI policy suite, the market has just ignored this, what I call as policy pivot. India's policy environment today is far more certain than the rest of the world put together, whether it's US, Europe, or China. So you want to buy this policy certainty, and I think investors will buy it. Our retail investors get it. And I suspect that February may have been record inflows. And a lot of people have been quizzing me about when will retail give up. And I've got tired of saying this, they won't. Now, if you look at the foreign portfolio position in India, they are the most underweight they've been on Indian equities ever. And most importantly, India is now a low beta market, unlike the past. So if you go back 10, 15 years, India used to be a market which had a beta of more than 1. And for your listeners, that means that India used to go up or down a lot more than the world. Now, if the world is in a trickier position than it has been for many years, the likelihood is that India will outperform. India is like consumer staple stocks. It will outperform a bear market in the world. It is very hard to time the bottom. I have no idea whether it's a bottom or not. What I know is that stocks are looking attractive, and in time this may prove to be a good time to engage. There's a lot of uncertainty around. It's a lot less than the uncertainty we experienced during COVID. But during COVID, one of the things I had read in my life, which was of great use to me, was that the point of maximum uncertainty is also equal to the point of maximum return. I think India will beat these markets.
India will outperform.
Yeah, and I think small and mid caps will do quite well into the next few months. Maybe they go down first a little bit more before they turn around.
Hello and welcome to Newsmakers. Shares of IndusInd Bank have been under pressure the last couple of days. Last Friday, the Reserve Bank gave a one-year extension to CEO Sumant Katfalia against a 3-year term recommended by the board. And on Monday evening, the company disclosed that the bank could suffer about 1,500 crore of losses because of some understatement of costs with respect to its derivatives portfolio. As a result, the stock has lost about 30% over the past 2 trading days. To understand more about the nature of the problem, we have with us the MD and CEO himself, Mr. Sumant Katfalia. My colleague Ritu Singh is also joining in the interview. Ritu, welcome. Sumant, thank you very much indeed for your time. Derivatives is always tough to understand. Can you explain the problem in simple terms to your investors?
So I think the problem really is specifically in the internal deals for our foreign currency liabilities. The currency risk was hedged through derivative instruments. During a review of the processes in connection with the